Welcome back to Corporate Radar. UCO Bank has reported a good set for the June quarter with advances growing by 16.5%, deposits by 11.5%, both well above the industry average, even if lower than their own previous quarter. The net interest margins have fallen, but by only 4 basis points to 3.18. On the other hand, slippages have gone up a bit from 1.08% slippage ratio in March quarter to 1.18 this quarter. There is also a slight fall in return on assets and return on equity, which would bother investors. Joining me to discuss these numbers is the Managing Director and CEO, Mr. Ashwani Kumar. Mr. Kumar, good morning, and thank you very much indeed for joining me. Can you tell us what will be the progress in terms of both loan growth and margins? Your loan growth is lower compared to the last quarter. One can understand that. The March quarter is always a busy quarter. But can you steady yourself at around 16% loan growth?
Thank you, Latha ji, for having me on your show. First of all, let me share with you that for last 2 years, we have been growing in our advances and deposit growth also. Deposit growth last year, we were not growing much because our CD ratio was lower. So this year, we have started looking at the deposits also, and you can see that the March quarter and this June quarter, our deposit growth is more than 11%. So, and that momentum will continue because now we have achieved our CD ratio of 75%. Going forward, if you look at our advances growth, last 4, 5 quarters or 6 quarters, we are growing our advances, and this advances growth is mainly coming from retail, agri and MSME segment. And that segment still continues in this quarter also. Our home loan growth was around 18%, vehicle loan was 66%, MSME grew by 20%, and agriculture 15%. So these are the 3 engines of our growth which are growing at a good pace. And I expect that these growth momentum to continue because our 3,300 franchisee in the field branch network is working towards reaching out to retail customers, agri and MSME. So this growth momentum will continue.
No, your growth momentum, you have guided for something less. You're guiding only for 12 to 14. So you think 16 is tough to maintain?
See, guidance is always on a conservative basis. Last year also, if you look at our guidance was 12 to 14, but we achieved more than 17. But looking at the current market scenario where the credit growth has slightly come down, though the guidance continues to remain 12 to 14%, but being small in our base is a little small. So I expect we may surpass the guidance.
Okay. What about margins? You've managed it very well in the current quarter. Almost every other bank has lost from between 7 to 27 basis points in terms of impact on margins. Will there be more now that the full 100 basis repo cut comes into force? By the way, how much of your loans are linked to external benchmarks?
Our external benchmark loan links are around more than 50%. I think 53% are linked to external benchmark, where full transmission has happened. In MCLR also, we have already reduced MCLR by 10 bips. And next month again, ALCO will happen, and then the call will be taken about the MCLR also. So the repricing of MCLR loan also will take place a little bit. But simultaneously, if you look at the deposit market, our deposit rates have also come down, not only in the bulk market, but in the retail deposit market also. So the deposit repricing will also start happening from this quarter. And I think by December quarter, the bulk deposit repricing will be over. And by March, retail repricing will also be substantially over. So I expect that by the year end, the margins will stabilize. Maybe in this quarter, we'll see another 2, 3, 4 bips of decline in the margin, because this will be the full quarter where we'll have a 1% reduction in the repo rate. In the last quarter, we had only 1 month. So this quarter, we will have the full impact.
No, fair enough. And then after September, you will have the advantage of CRR. So yes. What may be the exit margin? Exit margin will be well above 3. Will it be 3.2? I mean, last quarter.
See, our guidance for the margin is 3 to 3.10%. Okay, and we expect by March, we will reach to this level.
All right. Okay, slippages, that is the sticky point. Where did it rise, sir? I was trying to look through your PowerPoint presentation, and in slide number 33, it looks like corporates are the ones that have reported higher slippages.
See, I think it's not corporate. We have a slippage in one MSME segment, 337 crore, out of which 300
Okay, okay.
crore, total 300 plus crore. Out of that, one was mid corporate segment. It is one
Okay.
account only, 137 crore slippage was there in that account. Because of that, slightly slippage is higher in this quarter, but overall slippage is within the guidance of slippage ratio we have given. Our
Okay.
slippage ratio guidance is 1 to 1.25 and annualized slippage ratio is 1.1 time, 1.18.
Okay, no, fair enough. Sorry, I was looking at not slippages, but SME. I'm sorry. In SMA, the only worry I have, and by the way, for those of you who don't follow this jargon, SMA is simply loans which are overdue. So SMA 0 if it is overdue for 30 days, SMA 1 if it's overdue for 60 days, and SMA 2 if it's overdue for almost 90 days. Now, what I notice is that your SMA 3 has gone up. SMA 2 has gone up from 0.03 in the last quarter to 0.3 in this quarter. Almost a 30 bips rise. And over there, I think it is the corporates which are showing higher SMA. Are you worried that your slippage will continue, even in this quarter?
See, Lataji, if you look at our overall SMA figure, more than 1 crore we report, we are the bank, we report more than 1 crore SMA figures, SMA 012. SMA 2 figure in this quarter looks higher because previous quarter, it was because of the February impact, it was 59 days. So certain accounts which were technically in SMA 1, actually they were in SMA
Okay.
2. Because of that, if you look at our trajectory of SMA
Got
over
it.
the previous quarter, it is in the same range.
Okay, so you're saying there's no danger
No danger.
that this is more a technical number because of the number of days.
Yes.
Okay, what about the recoveries, possible recoveries from the NARCL? You have given a detailed table, but I was not able to make out how much money you will make from NCLT and NARCL. Should we expect some recoveries?
See, in this quarter, we had around 275 crore of recovery through in our NARCL. And one account is already under discussion, which is amount of rupees 75 crore. That is already identified. Due diligence is going on. So I expect that account also to be resolved. There are further accounts which are getting identified for discussion with the NARCL in the times to come. So we expect that certain more accounts will be added in this quarter and the next quarters for the resolution with through NARCL or through NCLT.
Okay. Oh, what about capital raising? Government has 90% in you. This is a damn good time for you to raise. I think you all have a 2,700 crore capital raising resolution also.
Yes.
Isn't this a damn good time to raise? Should we expect something soon?
See, last year in the March quarter, we raised around 2,000 crore and we reduced our government stake from 95% to 90%. This year also, we have taken a approval from the board and the shareholders to raise QI money. And we will plan in the next quarter at the opportune time when the time is ripe. That time we will plan for coming out of our plan for taking the money.
Okay, well, you have got a damn good example from State Bank. They have managed 35,000 crore. So 1/10 of that shouldn't be a problem for you. There will be an OFS also, right? Sometime now from the government?
Sorry? Yeah,
OFS, offer for sale?
Possible. There are discussions going on. I think Deepam has come out with RFP also for onboarding certain merchant bankers.
Okay.
So the discussions are on. Let's wait and watch.
Okay. Okay. Well, just a final big question. Bank of Maharashtra is only slightly larger bank than you in terms of loans and deposits, but they are reporting a ROA of nearly 2. Of course, they had some tax write back. That was a very big advantage. But why is your ROA and ROE falling? Do you see that bottoming out? Can we expect 1% ROA sometime soon and even ROE to go back above 15?
See, if you look at our net NPA is still 0.45 and we are working to bring it further down. And our cost to income ratio is slightly higher than the Bank of Maharashtra, which you just spoke. And we are working very closely and to reduce our cost to income ratio. That is the main factor. And we are working on two things on that. One, we are working on employee productivity and we are working on branch productivity. If you look at our employee per employee business is growing on a quarter-on-quarter basis and similarly per branch business. So I think that will give us a delta in the coming quarters. And I think anytime in the next year, we'll see more than one ROE.
This is so heartening to hear. Thank you very much. We are seeing public sector banks giving private sector banks a run for their money in terms of the pace of growth, even if not in final ratios. That's a heartening sign. Thank you very much, Mr. Ashwani Kumar, for joining us. Have to wrap up on Bazaar. Chartbusters ready for you.